Hello, welcome back to Dissident Canada. My name is Tyler. Today, I'm going to be talking about open banking while I wait for, with bated breath, about more information about what's going on with Israel and Iran. Because that is oh so important, that the fact that people seem to be falling for the regime change narrative. 25th time's the charm. Eventually they'll get it right. Anyways, open banking has popped back up in Canadian media. They're starting to slowly push it. First, I saw it from CTV News, but in the last, say, day for me, there is quite a few new articles from Canadian media, mainstream, and even if it's tangentially mainstream, subsidiaries and so on and so forth. The propaganda wing pushing back into the faces of bringing back open banking. Open banking, I should start with that, is basically a concept of interconnecting financial services and companies. So think banks, loan companies, mortgage companies, just integrating their data so that they can share faster and better. And it's great for the consumer because you're going to be able to easily get the best prices, get the best rates. All of that sounds really fucking good unless you read the actual legislation and you realize that Canadian government really doesn't push for consumer rights or anything good for consumers. And you understand what a central bank digital currency would need to be in reality. And to get through that, you have to understand how the banking system currently operates to a certain degree. So I'll have to go through all of that. But the thing that really terrifies me about the open banking push, specifically in Canada, is one, it's being done by the government. If it was done by, just fintech, of being like, hey, bank A, bank B, mortgage broker, we're going to create an API that's going to allow you all three to talk to each other, and you're going to get better results and more customers, and you're going to become fabulously wealthy. If that was the push, I wouldn't be so worried. But the fact it's coming from the government, and the fact that the government, if you read, I went over this on Christmas. Was it Christmas Day? I put out that video. I don't remember. I think it was right around there, relatively recently, and I broke down the actual law of what was in it, or the most recent iteration of it that passed through the House and Senate. And it's basically just a framework. But if you read it, buried in there is they want to integrate crown corporations into this. All right? That's the thing that really sent me off. And I'm going to get into that. So, first, we have to go through what the banks are at this point. Banks are basically just digital ledgers at this point. It's digital recording of who owes who what, and all the data connected to that account. Accounts are either people or businesses. Very simple, right? Okay. So, what realistically a central bank digital currency would have to be? Because they're already trying this in various countries throughout the world, and they're failing. Algeria, Nigeria, is it Tobago, Trinidad, quite a few Caribbean islands they've integrated, and they've all basically failed, and it's all basically because it's replacing the current system with the government in countries where the government has so low trust you get fuck all adoption and you're basically back at the barter system, or you're using the previous currency that is physical. But so if you wanted to do a central bank digital currency, you'd have to unify all the ledgers of the banks and have those ledgers stored at the central bank at a certain point. That's not it's where it would eventually go, but at first it would just be interconnected ledgers. Now, technically today they are interconnected in a decentralized manner, okay? But each bank's ledger is basically a silo, all right? They're connected at certain points, but it's not, say, like the internet where you have a web of interconnectivity. It's siloed from this is the ledger. It's connected to one point in the bank, and then that point in the bank is connected over. It does not touch the other banks directly. Whereas with a central bank digital currency, you would need the ledgers to be interconnected, dispersed throughout. So you'd have one unified ledger. They'd all be one thing, but they'd be dispersed throughout the banks at the first. So what that means that would look like for you, the consumer, is you would continue on using your current system. If you have problems with your bank account, you'd go to your local bank. You'd go use your current card. You'd use your same credit card. All that would be the same. All right? It'd have the same fucking name on it. If you have BMO, you'd have a continued BMO card. Like, nothing would change. But with the advent of bringing in crown corporations, one of the crown corporations that is mentioned in there is specifically the Bank of Canada, which is our central bank here in Canada. So, you are connecting the end user to the central bank in a roundabout way at first. But as, we're going through financial issues, what happens eventually is central banks create bank reserves, which I have a video on that if you want to go check that out. Multiple videos now. And they're going to then use that and buy. It's not really buying. It's an asset swap. So, they'll go to TD and be like, oh, hey, you've got these junk bonds. Here, have, bank reserves, let's say valued at 3/4 of what the junk bonds are currently valued at. And we get the junk bonds, we take all that risk, you've got that. So then at the central bank, all right, their ledger has new assets on it. And they're still kind of technically TDs in this instance, because when you get the opposite of QT, TD is just going to immediately try to buy back what was basically stolen from them. But and you do that at a time when you're pushing this through, okay? Eventually, the banks themselves are going to be like, well, you know what? We're taking all this risk with having this interconnected API stuff connected to our bank ledger, all right? And again, the bank ledger, for all intents and purposes, is the fucking bank. Like, if you go look at money aggregates, there's fuck all stored in as vault cash or physical assets. It's all digital shit, all right? So if that ledger leaves the possession of the bank is no longer a bank. Like, what this puts the framework for is offloading those ledgers into the hands of the central bank, all right? Which at that point you have a centralized, unified ledger in the hands of the central bank. That is a central bank digital currency. They would have complete control over the monetary system by controlling the ledgers. Because that's what the monetary system is each bank's individual ledger. Well, they have multiple ledgers, but it is those ledgers are the banking system. That is the monetary system, all right? The EU has already pushed forward with this shit, all right? They did it like a decade ago. They haven't yet used it to bring forth a CBDC. They keep trying to. Not in so many words, but they keep pushing it forward. Like, security is also a big problem with this. Like, you're going to have one entry point that you can get into instead of the multiple different entry points you could use. Like, security is an issue. Like, if the API ever gets compromised, the entire network's compromised, and you have to rebuild everything, security-wise, like, that's an issue. But I think the biggest issue here is it's a government push for interconnectivity and interoperability between banks. That has never fucking worked out. When the government gets involved in banks, banks don't like it, and they react poorly. If you do not believe me, go look at what happened with Bear Stearns when they could not find a bank in the world to loan them on a short-term basis, so they technically became insolvent. And the government came to JP Morgan Chase and said, you now own these motherfuckers. JP Morgan Chase has been so gun-shy with their balance sheet, it's suspected that they could basically survive an apocalyptic pullback in the markets and be completely fine. All right? And that only happened after Bear Stearns, the forcible merger that happened, and the other forced acquisitions by the United States government that JP Morgan Chase had to do. All right? So, like, JP Morgan Chase went from operating like specifically JP Morgan, operating like a bank or a bank-like entity to now being super fucking gun-shy and extremely prickish as a bank. I mean, all banks have done that. And that is the fallout of what happened in 2008. Yeah. Could this be a good thing? Absolutely. I'm here to warn you about the risk of this. Because once you become comfortable with, say, this system, all right, where you can, go use some third-party app or service or whatever and be like, oh, hey, I can get the best loan rate and deal from this bank for a car loan or for my mortgage or whatever. It's once you become completely comfortable, it's only a matter of time until banks, with how gun-shy they are like, you know what, we actually like this. It's really interconnected with the Bank of Canada. Can we offload our stuff, our balance sheets, our ledgers onto yours, so that we don't have the risk, because, we're really, really gun-shy and you need us not to be gun-shy. Like, it's only a matter of time until someone puts that together, all right? Like, George Gammon has been talking about now for, I think, a couple of years about how a central bank digital currency would look like in reality. Would look like what's its name in the Soviet Union? Was it Grozbank? I think that's how it's pronounced. Where like everybody had an account at the central bank. It was the bank. And if at any point the ledgers of the few big banks there are in Canada are offloaded onto the Bank of Canada, that is a central bank digital currency. By my definition. Because the ledgers are the banking system, they are the monetary system, and if they're in the hands of the central bank, they control it completely. Like, if you think, all right, the inflationary pressure is bad now, wait till they actually control the monetary system. All right? You could very easily have the exact same situation as Weimar Germany, or it could be absolutely worse. You could also have the continuation of basically what we have now, which is the polar opposite of Weimar Germany, where instead of the currency itself being devalued because base money is being printed like there's no tomorrow, instead of that happening, we have base money being very stingently printed, and instead we have the issuance of debt, which drives up the demand for the individual currency unit like there's no tomorrow. Especially when you look at the advent of... They wanted to switch from the 30-year to the 40-year mortgage, right? Like, if you think a 40-year mortgage, that's more than... I think that's... What is it? It's either... I think it's double than a 30-year mortgage of demand for the dollar, the dollars that you have to pay back. So think of it like this. You get $1 million loan, all right? Over 40 years, you have to pay back at least $3 million, I think, right off the top of my head is the calculation, depending on interest rate. So once you pay back $1 million, all right, that gets rid of the initial loan amount, and there's still $2 million being owed, okay? But you've reduced the circulating supply of dollars by $1 million. It went up by $1 million, and then it went down by $1 million because you paid it back. But there's still $2 million amount of debt outstanding. So what does that do to the internal value of the currency? Well, it continues to go up. And you break that out across, all loans that happened at once, or all the loans that happen throughout the day, which debt-based monetary system, there's a shit ton of debt. It drives up the price very quickly, which then drives down velocity, which then price goes up. Yes, it is more complicated than, oh, they made more money, prices go up. Well, they expanded the money supply by a metric fuck ton during COVID. Why didn't prices go up by a metric fuck ton like you saw in Weimar Germany, Argentina, Venezuela, Zimbabwe, just to name a few examples? Because it's more complicated than that. It always has been. Anyways, most likely tomorrow's video will be not a white pill video. It will be about Trump being a fucking chump, being played like a chump, and being reckless and dangerous. Because obviously that's what's happening with Israel and Iran. That will most likely be tomorrow. I can finally get that off my chest. And hopefully I don't have to deal with the fuckwits who want a global war that will be in their front fucking lawn. Anyways, that's the end of the video. See you tomorrow with that. Hopefully, maybe, if we get lucky, there is a massive fucking white pill that happens in the next, for me, 48 hours. But, whatever happens, I hope you have had a good week and have, some good plans for the weekend. Until the next video,